One of the fears hanging over stocks is that the Federal Reserve, sensing an improving economy, may slow its bond buying program. So the question now is good economic news suddenly bad for the markets? Kelly Evans takes a look.
The U.S. labor market is improving. New claims for unemployment benefits fell by 23,000 last week, and the total number of Americans on jobless rolls is back below 3 million for the first time in 5 years. Good news, right? Not so fast. Stock market futures took a hit this morning after that report. New home sales and prices beat expectations, but the market shrugs it off. These are just the latest examples of what's become the new normal behavior on Wall Street. Stocks now seem to sell off every time we get better than expected reports on the U.S. economy instead of cheering the news. So what's going on? Shouldn't investors bid up stocks on the prospect of better future earnings and revenue growth?
Not right now, because there's more concern about how the economy will do if the Fed begins to taper its $85 billion a month in support. In fact, markets tumbled globally yesterday after Fed Chairman Ben Bernanke told Congress the Fed could begin to dial back as soon as this summer if the labor market improves.
We're trying to make an assessment of whether or not we have seen real and sustainable progress in the labor market outlook. And this is a judgment that the committee will have to make. If we see continued improvement and we have confidence that that is going to be sustained, then we could, in the next few meetings, we could take a step down in our pace of purchases.
After those comments, U.S. markets turned negative, and it was a sea of red across Asia and Europe as well. For one, investors are worried that the U.S. economy isn't strong enough on its own to justify stock market prices this high. For another, the prospect of higher interest rates without the Fed's bond buying is spooking concern as well. Still, some investors saw the early sell-off Thursday as a buying opportunity, and that helped the Dow rebound from triple-digit early morning losses. Perhaps it also helped that a gauge of U.S. manufacturing activity separately fell to an 8-month low. The message? The U.S. still isn't strong enough to stand on its own two legs. And that bad news, for now, is seen as good news on Wall Street.
For Nightly Business Report, I'm Kelly Evans from the New York Stock Exchange.